Hello and welcome. Today is the end of the 10th day of March 2018. My name is Derek. Like always, everything within your own risk and own reward. And we'll take a look at some alternate coins. Now the daylight savings time begins in my neck of the woods, which is the Toronto area, or Canada rather. And I think the United States as well will be changing the clocks. I don't think this is the case in the European time or in different areas, although I might be wrong. But with that being stated, I get up with the sun. So I'm getting up an hour later tomorrow, so the 4-minute morning. And it's a Sunday, no guarantee that it's going to be anywhere near 9 o'clock in the morning. Okay. UNB. And I was thinking, when I first started looking at charts, and this occurred on a late summer or early autumn night in 2007, as a friend showed me a random stock market chart. And one of the things I noticed was, well, I guess you just need to sell the lower ends, or excuse me, rather buy at the lower ends and sell up here. And I knew then that it was obviously easy when you looked at the results. So yeah, of course you're buying down here and you're selling up here and you're buying back here and all that type of stuff. That's easy. The whole point of it is that's how you do it, or that's what you're supposed to do, is sell it for a higher price than what you buy it for. It's just finding a way to go ahead and do such. Now, after that time frame, I was shown the channel Thermal One, which is Brian Shannon from alphatrends.net. He's still doing videos today. Every Friday, he puts out a stock market, Bitcoin, and gold technical analysis. And I learned a lot from him through the rest of the 2007 year and practically all of 2008 into 2009. So he was basically my teacher, and I know I've now a teacher for many people on this channel, which is just magnificent. All right, so then, reversal of trend. This is something I taught myself because this 18 average that I use, it's the front-weighted 18 average of highs, it's the front-weighted 18 average of lows. Back in the day, in 2009, there was a site that came out called freestockcharts.com. And I realized that I could choose the higher the low for the moving average. So I thought, hey, wait a second. What would it be like if I had the exact same period, high and low? And I put this in, and I've loved it ever since. I have never stopped using it. And it's primarily the only moving kind of, or any kind of indicator that I use outside of regular lines, which you can see I'm using a lot of as well. But with that being stated, reversal of trend. One, you're in the declining mode coming down here. Band flattens out. Establish resistance. And it has to be a decent move above the 18 average of highs. So this move in here back on January the 27th was big enough. So stage 2, come back to the band, which it did immediately. Stage 3, break the band. It didn't even break the 18 average of highs. So a concerning area on February the 2nd when it closed below such. More concern when you had a pause day. A pause day is when you really don't do anything after the previous day. Usually it's an inside day, but if you break a higher or low, you usually do it barely. And it usually happens after a significant move, either up or down, and it doesn't go down or up further, and yeah, it just stays in there. So that was bearish, but the next day it had a green candle up to the 18 average. Okay, we've held the support level. It's still got to get above, then the red candle down, and we can see on the break of support, we could already tell for many days in February, oh, is this going to be the failed breakout, fast move lower? The answer to that is yes. And where would I state I'd be looking to buy? 67.49, which just happens to be mathematical Fibonacci. So these numbers were available at the time. And now as we see the market, stage 1 band flattened out. Well, when you look at it from before the fact, The only reason you can say that this thing might go up is because it's at a key level and it's down a lot. But at the same point, this is an area of support. And it stayed there for many days, so that technically counts as support. And though it's weak when you don't get any price moves to the upside. So there's definitely more reason to be bearish than bullish, which is why I'm not a big fan of even selling situations like this when you know it's looking like it's going to break down. And then you have this. So that is establishing resistance and band flattening out at the same time, basically. And within several days, back to the 18 average. So that's the stage 3. Stage 4 is the break of this 16.5 level. It's had some nice higher lows. It's had some nice tests above there. In fact, when we look at these lines, 1, 2, 3, 4 consecutive days in which it resisted this level. Then it did again for a 5th time on March the 7th, and again for a 6th time on March the 9th. Each time there was never any major selling, and I'll define major selling as coming back to this key level. Although at first there was, but there's 2 reasons for that. One, original profit takers that have been waiting to get in there. How about people who are trying to get out at even? And then you get those original sellers. That's going to happen with pretty much every single market. But it doesn't go down any further. Buyers come back, but sellers, when you see these up higher highs and higher lows like we have over the last week, shows that sellers aren't as enthusiastic to sell, and buyers are coming in earlier than they would normally have before. We'll take a look at this on the 4-hour time frame. So there's that big amount of selling. So the order books, when this happens, is generally not the largest. However, there was 1, 2, 3, 4, 5 periods or so after it broke through. So almost a full day for people to put buy orders in. But when you have a fast move up, oftentimes you're going to get a fast move lower, and you just look at the mathematics to how many buy orders there would be from, in this case, we'll say when it breaks resistance at 76. Because the only people that would have buy orders in there are the ones that would place it just after the fact of the breakout. It's the only way it can be. So when you have these sideways correctionary moves, what you enable within the order books of the market is both the bid and ask prices within price action, 10% above, 10% below, to start to strengthen. And oftentimes where these big rallies, you have to wait decent amount of times, is because big whales realize that not only do they need confirmation like they see with these higher lows, but they want to make sure that if they're buying this up, that there's a lot of asks up to say 14.3. Whereas by doing it here, it's very dangerous because you get these big volatile moves. So if you're trying to pick up a lot of tokens, shares, or anything in a market, by waiting and letting them fill, it enables you to get them at a cheaper price than you would have had you done it, say, weeks or months back in time. Well, I didn't think I'd spend so much time on just Unbreakable, but I think it's key information. There's a few other coins I want to go over, so I don't know how long this video is going to be, but I'll keep on going as long as I can. Let's look at NEM, New Economy Movement, and we're looking at the 4-hour time frame. So there's a declining situation. And where do we count established resistance? Because one could say, you know what? I mean, this is high enough. This was a big, big move, but when you have a move of this nature that goes from 2,900 up to 3,900, that's about a 30% move from that low. And you did come up to a point of major support. It was support from February 20th through the 25th. You pulled back to the band, and now what do we see here? 1, 2, 3, 4, 5 or 6 green candles hugging the 18 average of highs like this. You can't be surprised you see a green candle like this. In fact, you would have been waiting for it even a couple periods before it was looking so nice. And now it's up to that key level. And when I see something like this, I think this is like flipping a coin in my book for what it's going to do next. Either have a decent pierce and continuation of what it's doing, like a green candle like this, or at least continuation follow through green candles, and significantly breaking the high, which would be looking of at least close to 4,100 or more, or that of a successful, even unsuccessful for that matter, short-term correction back to this key area where it came from, which would be between 36 and the 3600s. I don't know. This makes, and every single time when I sell in a situation like this, I'm always cringing because I'm like, oh man, is it really going to go down? And how much is it going to go down? Am I just going to get a case where we have like 2 to 3 periods where we have pause situations where it doesn't go down much and then it's just going to go higher? Because those can happen a lot as well. Let's take a look at this on the daily chart. Stage 1, band flatten out. It's done. Stage 2, establish resistance. That's not been done. Stage 3, let's get some Fibonacci going. Let's take a look at some more. So you're looking at this. Where do you calculate it? What's the important numbers? Where can I draw a line to possibly give myself an advantage? Let's take a look at as much data as I can. The obvious one is this low and this high. Now there can be more key factors of historical data to show that this high might be a little lower or higher. Same with this low. 2x hit of this high. That's really, really important. And then I'm either going to have to use this low or any of these previous ones. I think you would want to do a combination of this one and this one down here. This is like 35 Satoshi. So I'll use my spread. I'm not going to do this one as of yet. So now as far as picking a support level, which low do you choose? Do you choose this one here at around 21.25 because it was the support on Halloween? It was also support on November 27th. This move here had one of those failed move fast moves. Now the one privilege that I have is I can know the date's December the 6th. So I can take a look at this on a shorter term time frame and look back and seeing what happened on December 6th. So what I'm doing is I'm getting the maximum data that I can, and I'm just going to move this over and see if it'll give me, and yeah, here we are, December 6th. That's a real move. That's a real move. I got to count this low. I'm going to count this low because if it was like a flash type of crash move lower, I'd have a hard time counting it. But I see this all the time in the stock market, forex market, commodities markets, where you get this is a huge one here. This is a big one, where you get failed move, fast move on a big move. So before it happens, and here you're like, oh, so what's the case? Well, either you break support below 21, you're gonna have a big move lower, or you're going to break either these two barriers of resistance at 28 and around 33. And yeah, breaking 28, we're going here. Breaking there, we'll have a good gain. But the fortunate thing about this failed move to fast move was most of the time you get a failed breakdown, you don't get this large of a move, which kind of sucks because that disables me as a trader if I'm looking to buy low into getting some. For example, there's a good chance that if the market breaks below 2200 and it falls to 1400, I'm going to buy. But if it goes down to like 1980 Yeah, I want to see it go down more. And most failed moves do that. It goes down to a point where I could never buy. This one was different in this case. Okay, so then, what's the low in here? Let's get the number while we're at it. This low is 1128. And I'm going to scroll to the very end again, change the time frame, and do some calculations within the high. And the first number I'm going to insert is the 23.6, the lowest of these numbers. This comes in at 2041. So this automatically tells me that if any move here, as we see the trend trying to change over, if this move doesn't materialize itself and it's not able to do much and make a nice run to the upside, that on a break of this support, I'm going to be looking for price action to go down to such. What works out to a 61.8% down move, but it is high divided by low to the root of 0.382, which means 38% from the downside. And then multiply the low. I'm going to place that number in next. And that comes in at 29.46. What can you say? It just happened to hit it pretty much right on, and it's rallying from there. Who would have thunk it? The next number is your area. I'd be looking as a sell target. It would be the also projected area that you would expect the next key level of resistance to come in, both bullish and bearishly. That number is in at 53.30, an area that was not support. It was not resistance on the way down. This level of support is, in my book, too large of a move higher to call it as a pierce, although maybe a monstrous pierce above. But when you have a situation of a key level that's supposed to stop going up or down and it doesn't, well, don't be surprised if there's a fast move to the next level. And there's a little bit of consolidation amongst the 50% retracement in between both of these key areas. And of course, that's the area it's coming up to now. That's around 4,100. Prices is very close to that right now at 39. And then the next key level above that, the 76.4%, 76.93. So I do know that if, say, we come up to this 53.30 handle, and there is no resistance there or very quick support there, then I'm going to be thinking it's going to keep going up to 77 pretty darn near fast. Especially given the state of how these cryptos work. Markets go up usually a lot faster than they go down. This down move was from late May to early December. So that worked out to that of a little over 6 months. So what it lost in 1/2 of a year, it got back in 1 month because it topped on January the 4th. Well, this bottom came into play on March the 3rd. So right now, if this is the bottom, and bottoms are known and tops are known after the fact, it will be 2 months. What is after the fact? Well, in a situation where this thing has an explosive up move, okay, that's a bottom. Or if this gets through stage number 4, then I'll count that as a bottom because stage 1 is band flattening out. 2, establish resistance. I'd have to say at least around 45. Yeah, 44 maybe, but I'd like to see even 45 to go up to. Come back to the band or just go sideways for the band to catch up, anything like that. And then when it's able to make a new high significantly after that, then it's an uptrend and you can say, yep, this is the bottom. And you're now going to be making that of a high, which we followed up either by that of a lower low, matching lower, higher, or higher low thereafter. Okay, still got a couple codes I want to go over, so let's go on to the next one. Feather coin has got an interesting pattern, as since it had its move on March the 2nd, is making this interesting pattern of going higher and now having a few days supporting the 18 average of highs like it is, and it did it here too as well. This thing looks ready to go at any time. I'm pretty confident in this one just by looking at the chart. But technical analysis to me only gives you probability odds either to be good or bad for something to happen. And in this case, the probability odds are good or better to have anything of a significant up move compared to anything that of a significant down move in the future. Storage, interesting chart it had, because we can see after the band flattened out, it came up to this point. Is this enough to establish resistance? If it is, reversal of trend, stage 4, it's already done it. Break of established resistance, it has barely done so. When you see this, you got to shorten the time frame out. You want to see more of the story. How did this candle react? And then within this rally and the session moving in today, because whenever you see a green candle like this, and we're looking at this one only 2.5 hours into the daily time frame, it's definitely reason to be very bullish on something of this nature. Let's take a look at this on the single hour time frame. So just recently, there's the 2 decent green up, getting above this level of key resistance and this one together. Support, it came back to where it came from. Yeah, I was going to say it didn't in here, but it did go over here. And this was coming from all this nice little uptrend, of course. So now we have the situation where you've had this little trend down. We can see significant lower highs on a per candle basis, even lower lows on some of them. And now the reversal has changed. 18 average of highs looking to be great support right now. As far as any type of short-term retracements, from this high to this low, I'm not going to do any Fibonacci calculations, but I'll take a look at it on the 10-minute. So we have this low in here. So 38% would have been somewhere around 11.3. 61.8 would have been somewhere in here. So this thing to me looks like it's going to break this level of resistance and create that of a leg higher. So the probability odds of having any type of candle movements like we've seen in here, what's the percentage move on this one? 11.8 up to 22, so double even. So the percentage chances of having any significant beautiful up day, 40, 50 plus %, is a lot better than it was any time here or here or here or anywhere within this down thrust. So yeah, I can't be surprised if I wake up tomorrow, an hour later albeit, that it's got a good green size candle towards it. All right, so I'm not done yet. Let's continue on. This is the Dash coin against Bitcoin, and key levels. Well, this level of support tested big time in a, I don't know what term you call these kind of days. Cattail, I think I called it all the time, but whatever. It's a spot where it goes way down in this case and comes back to the area where it was trading at before all this happened. But it came down to this key support level. And in here, it didn't do much for a couple days there. It broke below it. And now it's given me the easy story. Either we got the failed move lower, and like I was talking about with the NEM chart, usually the failed moves are of noticeable but not that of large proportions, because I'm not buying Dash at 0.0. I'm not buying at these levels here. Not even maybe. If it comes down to 461 area up to 464, okay, I'll get there. I'll buy there. So key support is between 35 to 46 on the way down. And the key Fibonacci would be probably around the 46 area. That's what I would expect if this is resistance. But if this thing can find a way to get above this line, stay and hold above it for a couple of days, that is, or a couple of periods when you look at the time frame in this case, which works out to a couple of days, then I'm going to be looking at this as a failed breakdown. And then I'm thinking, okay, fast move, where are we going to? It would probably be a fast move up to the 75 handle, where you'd probably see noticeable green candles. At least to that, that's your conservative level. So that's Dash. ArtBite, I mean, it's still in a downtrend. However, I have a line at 83. That's all I'm going to say about that. Ethereum against Bitcoin, you know, it's pretty much the same analysis as Dash. I mean, it's barely went below as far as where I think it would come. You might have some support amongst the 50% retracement. But, yep, that's Ethereum. Sia coin. And I have a better support a little higher than 202. I just recalculated and got key numbers in at 236 and 124. So it's 24 points higher than the 124 mark. I'll be curious, though, to see if it comes down there, what will happen within price action. This, again, is Sia coin, SC. UBQ, UBIC. Okay, failed move, fast move. It hasn't broken the 18 lows yet. And this period is only a couple hours into the session. And this is going to be a very, very big day, because if today doesn't work out to be an up day, then this could be, I mean, it's not going to be that big of a move, probably down to the 17,000 handle. But a move like this to get above the 18 average of highs, we can see it broke through this level of resistance here. So I want to short it out and only really take a look at the market since the middle of February. So let's take a look at the 4-hour time frame. So here's your failed move, which occurred on March the 5th. Breaking above and not holding. I mean, this is where it really needed to hold, right around the 24.9 handle. Higher low here, higher low here, make the higher low. We can see that there would have been a trend line break at this point. We see the resistance amongst the 18, resistance amongst where it came from. And within this time frame, there we have a red candle down to the 18 lows, which is followed by breaking it lower. And this one, with an hour and 20 minutes left of a 4-hour time frame, has had significant amount of time to have something going on. So this is very much a pause situation, showing a lot of weakness within this via looking at technical analysis through multiple time frames. Major support here at this point. And of course, breaking below this, I'll be looking for support in at around the 17,000 handle. Bitcoin Cash, I bought a little bit of this, not much. I want to get into it, and I've sold a bunch of stuff today, so I got more than Bitcoin than I need to get into it. However, we're in a situation in which the price action not really showing too much for either the bull or the bear camp. I can't get excited either as a bull or a bear within this. I got this low here, a higher low here. I got this high, I got this lower high, so I can make a pattern of higher highs, or higher lows rather, lower highs. It's just stuck within this low volatile price action. I'm just going to keep looking at it. Ripple, it's got a beautiful looking chart for major support at this line at around 93.38. And there's that little bit of a breakdown. So now is this going to be resisting a key area? Because it comes up to this line, but notice what has happened for like almost a week, grinding its way higher. If you take a look at this on a short-term time frame, we got a nice pattern of higher lows in here. I think if you were to draw a trend line amongst these lows and you see any weakness within it, definitely around this area of, well, now that it's made this low in here, I really don't think it's healthy to really break too much below it. I mean, it could technically come down here and then revert, but I think if there's ever like a time where you would be teaching someone to stop loss, and I don't believe in stop losses, I'd be probably thinking at around 85, 94 as a potential area. But the price action on this short-term 2-hour time frame has came back to where it's come from. So let's run a little bit decent amongst that level. But if you're waiting more for clarification amongst this situation, if you see price action holding and staying above this line for a decent amount of time, then that could be a good indication. And if this thing just happens to go, then you might want to take any kind of move that it makes serious along the fact, within that fact anyway, and within this 18 average, which is now in at 84.30 on the lows. It hasn't been anywhere near it for a few days. If you're seeing weakness within it, then you'll be looking at the case where it is resisting this level. You have established support at around 7,700. And a big price target I have in at around the 5,000 handle. DGB, it's near 233. Next code. And Redcoin, okay, this is your homework. Do you see any failed move, fast move possibilities here? This one is just interesting to say the least. It's so noticeable. It's been hovering, holding this support for quite some time. 5 days. Barely doing anything. Not breaking down, but not going higher as well, as it is maintaining itself below this 18 average of lows after it failed to find support within the 18 average during the last couple days of February. Oh, it found a little bit on March, but keyword was just a little bit. Probability odds to me state there is a better chance that the market will lose about 50% from here, going down to 35, than it would making a move of around double, we'll say to about 141, which is basically the same. Because I would expect this to go to 34 if there's a line at 35. So therefore, yeah, I mean, support is massive at this 62 level. What's this number here? This number is 67. This low is 62. So between 62 and 67 is major support, and that's where it's at right now. Here's Doggy or Doji, and well, remember that there's the same sort of pattern in here. It gets above it. It has its big support here, a little bit, well, this support line of Fibonacci, breaking through that. Now it's at the 18 average. I have to think that this thing is going to pierce below 32, which would be a loss of 13 basis points. That's a pretty decent sized move, but we're resisting right now within this 18 average. It's going to be very difficult to trust this rally. It's now just getting to where it came from. I wouldn't be surprised if it can make it up to this 18 average of highs, even to the Fibonacci line of 51. But I would be expecting that there's a good chance that it would roll over from that point on. Nexium, NXC, there we have the same situation on failed move, fast move possibility. Here's day one. Well, here's the 18 average correction. 2 days on March the 7th and March the 8th of hovering on the 18 lows, breaking below on it on the 9th day. And today's session, albeit a weekend, it's just hovering around in that area. Definitely not too optimistic about this. And when I look at this chart, I would be looking at a move to previous low in and around the 1100 and change area. Of course, with that being stated, stage 1, band flatten out. Stage 2, establish resistance. Stage 3, come back to the band. So that's where it's still at. If the market does hold this area and you see a break above this point here, then now you can start to talk about testing this previous support mark at around the 3,800 area. MUI, or monetary unit, also showing signs of that possible failed breakout. Several days in which it pierced above but closed or stayed within the 18 average of highs, which is established its resistance. It came back to it, but now we have this red day down to the 18 average, and also it spent its Saturday session just hovering around the 18 lows. So it's giving its weak signs. Price action has already came back to where it came from. So now we have to start talking about some of these earlier levels. So Fibonacci is going to represent a high at around 84.58, 84.72, and a low in at 15. Wow, big difference. I'm going to put the 23.6%. Well, that's it right there, 18.99. 18.99 is where the 23.6 down level happens to be. Close enough. So at first, this was an area of support, and then it broke below it, resisted it quite heavily. Then it got above this point, but it was unable to really extend further, and you have to hold where you come from. And that didn't occur here. We can see that the date, December the 5th, it broke down. This level of where it's been going to recently has been resistance. So therefore, the 38.2% down correction, and I wouldn't be surprised if this does work out to be great support if it falls, and I'm going to expect it to do such. 753. That would be the area I'd be looking for, and this would be lows not seen in about a year against Bitcoin. If it happens to get there. This is a very poor log scale that I'm looking at. If you look at this chart on Bittrex or TradingView, not TradingView, but CoinMarketCap rather, on a log scale, and any log scale with proper logarithmic settings from high to low would show a much better long-term bullish picture, but there is no doubt that amongst the mid-term and almost somewhat long-term, given a year that is, that the market is bearish, giving it at its pretty much its all-time lows for the year, and not showing any bullish sentiments at this point, compared to the way it would have been like, for sure, when it first got down there. Well, definitely back in October, you're like, okay, good time to buy here, and well, you had your selling opportunity already. If you missed it, you missed it. ZEC, Zcash, I'm used to, I normally don't say Z because I'm Canadian, but it's broken down below this key support level noticeably. I got a key number in a 2687 handle. So we'll see how that plays through, if it even makes it there. NEO, I have a key level in around the 672 handle. The support that it's had, roughly around the 101 handle, occurred right off the bat. It pierced above it here. But I do see that it's resisting this area here. After the move from the 18 average of lows, which it made a move down towards with this decent sized red candle on March the 1st, it followed through that with the down move and then continuation down. And now it's been about a full week of all the sideways, no action kind of movement. Well, I got a key number in at 672 if it just happens to go down there. And I definitely almost certain, I got a decent buy order in there actually at this moment. Decent is in like 2.5 times normal than any normal speculation play. LUN is another possible failed move, fast move situation, holding within the 18 average of lows for quite some time. There's two levels of support. The one it's at now, and then you have another key level in between that of 142 and 130. So if it breaks down below there, I'll be looking to see how that area holds up. I'm not going to calculate it, but I'd be guessing somewhere around 79 to about 82 to 87 if it does have a decent break as far as a real non-conservative but decent sized break below on this one. ETC, or Ethereum Classic, several red down days in a row as it left this 18 average, and price action has been in overall choppy but more so of a downtrend just looking at this because it was such a big move that it had. It hasn't rallied magnificent from this low, but it was still a decent move coming from the 13 handle up to about 36. That's almost triple. In fact, it was triple when it came up to 40. However, it makes it very difficult when it's making these higher lows as it is. It had this major fall and a level of resistance here on November the 12th, similar area on November 28th, similar area again January 13th, and it kind of held and stayed above this level here in the middle to late end of February. And that is a bullish signal that didn't transpire. Failed move, fast move, I guess. So the fact that it's been able to go down like this makes it very difficult in trying to determine what is the overall favorite here for this next move. You have this big low and all these higher lows in here. Have this big high, and again, these moves here, decent, but not great. Here we have Vertcoin, which has now broken below this support barrier from around the 31.9 handle. See how 25,000 works. It's a key Fibonacci level. Ant, or that of Aragon, not sure how it's correctly pronounced, but price action did find support at this key Fibonacci level. And it did have a test or establish this level of resistance, but you have this red candle in which comes down to the lows. The session on Saturday managed to make it up to the 18 average of highs, but pulled back. That's not cool. If you see any weakness below here, don't be surprised if this level does give in, but definitely on a break of this support, I'll be looking for price action to come down towards the 20,000 handle. I got in Strat a few days ago, and it's just grindingly going down a little bit lower. I got in at 60,000, now it's 59.6. Another quick update on OK Cash. I've been talking about this recently, but now the last couple of days here, hovering below this 18 average of lows after this event on March the 2nd. Are we looking at a failed move, fast move? Well, I do have a lower support line, but it's a long ways away at 757. It's also an area not seen since early September. We also got previous support here at around 1200 to the 1500 level for OK Cash. Looking at Faircoin, which also found support at a key Fibonacci level as well. Here's a spot where it came up, did this move above the 18, and then it had a few days below here, yet you have this green candle. So even though a setup may look weak, which this sure as heck did just a couple days ago, well, now all of a sudden with this move, the band continues to stay flat. Support has not been violated, which is oftentimes where you just wait for that to be the case, because as long as it holds, you don't want to give the benefit of the doubt to the sellers yet, but you've already established, or you've more strengthened this level of resistance because you came up there on the 3rd of or the 4th of March, and then you came up close to it again on the Saturday session. That breaking it above, then you're doing what Fibonacci is supposed to do, and I'd be looking for a a play. Just quickly looking at this between into the 8,000 to 9,000 range, and that's a pretty good gain from where we stand right now at 47. That's of course if it breaks resistance and follows through. Just you're trying to find the better probability odds. Game credits, it's coming close to this line at around 17,341. Cloak, after having this amazing move in here, establishing resistance very well, is having a lot of weakness right now within this 18. Do we see another failed move, fast move brewing within this? We'll see. I don't have another line drawn in yet. We'd be looking at first probably around 65 down to about 58 to 60 as just a quick look at this. Here is core, and this one in here has had this beautiful move higher, come back to the 18 average, and well, now we can see that it's had this lower high move back to where it came from. And as weak as the last little bit may seem, price action is still well above the 18 average of lows. And a 61.8% correction from this high to this low. As long as it holds, then that means that this rally has not failed yet. When it gives back 61.8% and it does not do any strength from thereafter, that to me tells me a move is a failure. Nexus, pretty much the same sort of deal. It's hanging in within this 18 average, but the last few days showing as if it may want to come down. 23,484, I have a key line in, so it was support before. We'll see if it is again, if there's going to be further decline. Unbreakable, which has had some successful support so far within around the 18 average of closes. Support resistance has worked out perfectly within this for the most part, but getting above here, I'll be expecting a decent sized break. And finally, Solus or Salus. I want to see it hold and stay above this area here. That's the big thing, and it's done it now for a little while. Because there's major resistance roughly around the 65 to 77 handle. So if that can be support, which it was on its first move lower. Also short term, you got this low, you got this high in here. If it can manage to make a higher low from this most previous one at the 551 handle, 18 average of lows is rising, so that's a good key area as well. Then there is no yet to believe that this market is ready to break down. But given its situation, here you had the failed move down before it went up. And if it can get above this resistance level, that is huge from the looks of this. I'd be looking for a move of previous high. Right now this is 008, and previous high is single O, like 30 something, 35. So that's about a 4x gain to that high. So thank you for tuning into this very, very long video. A lot of good information though. And have yourself a great day. Bye-bye.